So two boomers and a millennial walk into a bar, or in this case, a broadcast booth at a conference, and discuss a hidden history of money, why gold still matters today, and how to prepare Generation Alpha for what's coming. Stay tuned. Welcome to the Main Street Capitalist Show. I'm your host, Russell Gray. We are here live at the New Orleans Investment Conference, and I've been coming here for about a dozen years, but you're about to meet a man who's been coming here a lot longer than me, and he's one of the gurus in gold. And so with gold being one of the hottest asset classes out there this century, and certainly in the last year, you're definitely going to hang out for that. I'm also introducing one of the brand new hosts on the Main Street Media Network, a man you're going to love. He's got 7 children. He is an entrepreneur, a capitalist, a Main Street capitalist, but he's got a real passion for the next generation. So he and I have that in common. So first of all, let's welcome to the show Dana Samuelson.
Hi, Russ. Thanks for having me. It's great to be here with you.
Yeah, so Dana, and then let me introduce Max real quick while we do that. So Max Keller.
Yeah, just great to be here. Excited. Can't wait. Let's jump in.
All right. Dana is the president of American Gold Exchange. He's the gold guy. And so we're going to start with Dana, and then we'll come back to Max here in just a minute. But Dana, you've been coming to this conference. You go all the way back to a relationship with the founder of this conference. This conference has been running for 51 years.
Right. So I got my start in precious metals in 1980 at the tail end of the first big boom in metals. I got a job working in a vault, counting, shipping, weighing for 2 years because I could be trusted. And then I got a lucky break. We were doing business with Jim Blanchard's company in New Orleans, here in New Orleans. And I got hired as a young buck to be trained as a coin appraiser, a vintage U.S. gold and silver coin appraiser. So I went to work for Jim Blanchard, who founded this conference in early 1983. And I spent a couple of years grading, learning to grade coins, going to coin shows. And then I started to go to the trading desk to substitute for the buyer when he was on the road. And I was pretty good at that. And pretty soon I was promoted to the trading desk. And I got to spend about $50 million of Jim's money every year with the industry. And I got to know everybody. And it was my lucky break. So this is probably my 39th or 40th New Orleans Investment Conference since I started with Jim, and the years that I've been coming with American Gold Exchange now, which is probably 26 years.
So Dana has another claim to fame. He and I every month run what we call Main Street Investor Mentoring Club, and we'll tell you more about that later. But one of the things that I think is really interesting, Dana, for a lot of people, and what I'm going to do is I'm going to bring Max in because I don't know how much Max knows about gold, but my experience with Main Street is a lot of Main Street people do not understand gold. So Dana, specifically, Jim Blanchard did something really amazing. I mean, not just building a great business, not just training great people, not just creating a great conference, but he did something that literally changed Main Street and Main Street's opportunity to protect itself from what's happening with the inflation.
Right. So when the U.S. depegged itself from the dollar, from the gold peg to the dollar in 1971 under Richard Nixon, when we would no longer back the dollar, every dollar printed with an ounce of gold, Jim realized, as a student of history at that point in time, and he was still a young man, that the dollar would lose purchasing power over time.
Which means everything would go up in price. It would take more dollars to buy the same stuff.
Correct. So he started a movement, a grassroots movement, to legalize the private ownership of gold. And this was way before the internet, way before cell phones.
So stop right there. Max,
yes.
Did you know that prior to 1974, it was illegal for an American citizen to own gold?
That's unbelievable.
Yep.
Unbelievable. Yeah, I didn't experience it firsthand. I was born in 1980 when you were kind of getting everything going off the charts. But I was studying that, and I've had some experience with Jim Blanchard's company personally, so I want to talk about that.
Really? I didn't know that. So I'm learning too here,
Yep.
so continue.
Yeah, so Jim started the grassroots movement, which was difficult to do back then because we don't have the social media or any of the networking connections we have today. But he built up a list of people who were interested in what they called the National Committee for Monetary Reform to re-legalize private ownership of gold in the United States. He actually hired a biplane to buzz Richard Nixon's second inauguration with a banner on the back that said legalize gold ownership. And it didn't happen until Nixon was left the office in 1974. But when Gerald Ford came in, he did sign the bill, which allowed Americans to own gold again for the first time since 1933, when we recalled the gold out of the monetary system and took all the gold coins in.
Executive Order 6102. I have it actually framed and in my office right under the Declaration of Independence to remind me of how important real money is in being free. So, Max, let's come back to you. I had no idea that you even knew who Jim Blanchard was, so that's super impressive to me. Talk to me a little bit about what you understand, and then I'm actually going to let you ask Dana a bunch of questions, because I spent a lot of time with Dana, and I want to give you a chance to ask him anything you want to ask, because I think you'll be a better representative, perhaps, than I would be of what Main Street would want to ask if they had a chance to sit down with Dana themselves.
Sure, yeah. So absolute pleasure, great. And so I started investing in the company. I don't remember the exact name, but was it Blanchard.com or what? Or was it Gold? It wasn't Gold.Silver. I think that's the other guy's company.
When was this?
This was new. Let's see. I know I bought them, and I was calling people in New Orleans. I think this was around Carolyn was born. You know, I figure out when I was doing things by which child was being born. I have 7, and so I think this was around 2010.
2010, so that would have been Blanchard and Company.
Yeah,
they still exist as a business. They're a good company. They specialize more in rare coins and bullion.
Maybe more margin in those.
Yeah, they have a higher profit margin for the buy-sell spread on vintage U.S. rare coins. I deal in those as well, but we cater more to Main Street investors, as many people as possible. So we deal in the more common, widely traded, competitively priced, and more importantly, easily sellable precious metals items. So we stay on the main road for what items we buy and sell in. But there's a lot of companies you can do business with. The most important thing is you find people that you can trust, who have preferably been in the business for a long time, who will treat their clients well. Right?
So, my audience, I'm 44, I have 7 kids. They're ages 2 to 19. So, my show is about folks that, first generation, they're doing well. They didn't, came from humble backgrounds. And so this first gen that's listening is my age, and we're trying to raise the next gen, our kids, teach them about money. We don't have the playbook. We know how to make money, but we've never passed it on. Our parents didn't pass on money skills, money to us specifically. So I'm curious, I don't know if you have any children.
I do. I have 2. And I'm an older man, but I have a younger family.
Good. So what are you teaching your kids about money?
Well, we're trying to teach them how to understand the value of a dollar and how to create wealth just through hard work at this point in time. Because my kids are 13 and 7, so they're still a little on the young side.
We're doing the same stuff,
right?
Age-wise.
Yeah. So it's mostly the value of what your time and effort is, your work, what your work is worth, so you could earn something so that you can gain a reward. So that's how we train them to earn something so that they can get something that they want to get. But we haven't quite got to the savings part yet, which is gold and silver. So we're still working on the basics, basically.
Yeah, I'm curious, if you were to write a curriculum or design a program for kids and how they get introduced into gold and silver, what would it maybe look like? And do you like, physical gold, when we're teaching the next generation versus, just owning, I guess, gold in a safe or gold stocks? How do you feel about that?
I think the easiest way to do it is a way that Russ taught me, actually, which is the silver quarter versus the copper nickel quarter that you have in your pocket today. So from 1795 until 1964, the U.S. Mint made silver coins. And in the modern era, leading up to 1964, we had dimes, quarters, and half dollars that were 90% silver by weight. In 1964, a silver quarter would buy you a gallon of gas. When we went off the silver standard and went to copper nickel coins, 1965, a copper nickel coin would buy you a gallon of gas. Today, the copper nickel coin, which is the same as that 1965 coin, will buy you 1/10 of a gallon of gas. Where, with the way the silver price has gone now, a silver quarter will buy you 3 gallons of gas today. So I think showing them the difference tangibly in their hands and seeing the physical difference from one that when you drop it on the table, it rings because it has that silver in it. And you drop the other one on the table and it goes thud. And one's heavier and one's lighter. I think that's a tangible way that they can perceive it and realize it. Otherwise, concepts are kind of hard for kids to understand. But if you can put it in their hands and let them play with it and let them feel it, they get it much more quickly.
Yeah, that makes a lot of sense. So what about their parents? You know, I'm getting reintroduced. You know, I've been making income in real estate. And so, you know, you kind of hear the drumbeat of that and, you know, buying real estate and holding and, you know, selling and all of active income, passive income. But for somebody who's maybe listening to this, got, you know, a pretty good, healthy income, how do they get, what's maybe the best couple of ways that you'd recommend they get introduced into the gold and silver space?
Well, it's pretty simple to get into the space. It's mostly finding the right person to get into the space with. But I think it's more importantly is making them understand why they should have some. Because what precious metals really are is a great way to save money outside of a depreciating dollar. And when we go through a cycle like we've gone through in the last couple of years where inflation has ramped up to 9% in 2022, and according to Jim Bianco today, who said, you know, over the last 4 years, inflation's really 24% in aggregate. You know, $100 at the grocery store today costs you 4 years later $124 for those same groceries. But if you have gold or silver, you can probably buy more than $100 worth of groceries with that gold and silver today, despite inflation spite. That's what you really have to teach people, because we don't have a financial culture for precious metals in our country. We don't teach that. It's not taught in schools. It's not taught in the universities. And of course, this is Robert Kiyosaki's biggest complaint, and what you're trying to do now through Main Street Media and Main Street Capital, which is to educate people on how to have sound savings. And that's really what precious metals are. It's a way to save money outside of a depreciating currency. It's an insurance policy for the rest of your finances, especially in times of trouble, because when we get into fiat currency debasement, that's when precious metals tend to do best as far as holding value and preserving wealth. That's really what they're there for. Once in a while you get a great market like we're in right now where you can actually make some real profits, but that's really not what it's all about. It's an insurance policy to help protect and preserve the wealth you have.
One more question, kind of last question on my mind right now, and then Russ, I want you to fire some off is, so let's say that you're purchasing and you're building a portfolio of some metals. You know, how would somebody approach what maybe percentage of the total pie that they have, and then when would somebody maybe rebalance it or even sell? When is it time to take, you know, some off of the table?
Well, there's a couple ways to look at that. The appropriate amount of precious metals to have, gold and silver, as part of an overall portfolio is 5 to 10% of assets, total assets.
Not a lot.
Right. That's enough to have that insurance policy and that hedge.
Got it.
During the great financial crisis, gold doubled in price when most assets fell 50% or more in price. Right. And we saw something similar in COVID with a knee jerk. So first of all, it's how much do you need to get to that 5 or 10% space?
Okay.
Then if you want to rebalance, if you get a windfall, say a really good year, you might want to trim that down. Harry Brown used to talk about years ago about having a balanced portfolio. 25% stocks, 25% bonds, 25% currencies, and 25% commodities, of which gold and silver fit in the commodity space. And every year, depending on the shifts in those 4 sections, you rebalance back to 25%. That's a great way to have a nice, easy way to have a balanced portfolio over time. Now, I'm not really a money manager per se,
Sure.
and there are more sophisticated ways to do it. From a basic standpoint, that makes a lot of sense to me, because you're going to have a gain in one year and a loss in one the same year. And if you rebalanced, you know, you're probably going to have a better opportunity to continue to grow wealth over time rather than putting more eggs in the good basket, which will inevitably go the other way, and vice versa.
One more. So within that 5 to 10%, maybe just being in real estate and wanting, you know, to have big yields, where's the most speculative part of that? Where are the parts of metals where you can maybe make some of the biggest returns?
Well, there are 4 precious metals, but most people just really need gold and silver. Okay. So I would say if you don't have anything, you should have about 50% of each. But as the the time passes and the values change, sometimes they go a little bit different pace than one or the other. So we look at just simply how much silver it takes to equal an ounce of gold via the gold to silver ratio. And over the last 25 years, the equilibrium point is about 65 to 1 parts silver equals 1 part gold. When we get over 85 parts to 1, that means silver is undervalued relative to gold. When we get to about 45 parts to 1, that means silver is overvalued relative to gold. So you might want to shift between the two depending on where the gold to silver ratio is.
So what's the rarest coin that you either have or you've priced? Can you think of something?
We sold one of our clients one of the second finest $1795, which is the first year the United States made silver dollars, for $1.25 million.
Wow.
What do you think, Russ? Not bad? Do you have that? Was it you that you
It
sold
wasn't
to?
me. It wasn't me. I have simple taste when it comes to anything collectible. I'm a bullion guy. I want to be a Main Street bullionaire. But you tossing it back to me here?
Toss it back to you.
That's awesome. So, Dana and I get a chance to spend a lot of time together. For those of you that don't know, I think I might have mentioned at the top of the show, but every month Dana and I do 2 hours just talking about what's going on in the economy, what's going on in the macro economics, and we use gold as an indicator of the health of the currency, the health of the credit markets, and the health of the financial system. As an investor, I have a little bit of a different philosophy on the role of gold in a portfolio, what is the appropriate amount of gold to have, and how to use gold. And I won't go into that right now because we cover that on a different show when I get a chance to express my opinion. But Dana, I want to talk a little bit, just a little about what gold is saying right now, right? We're at this conference. You've been coming here for many, many, many years. We have some of the best economic minds, some of the biggest money managers. We have some of the best resource investors. We have all the companies from CEOs and representatives from mining companies, whether they're doing exploration or development. And with that type of perspective, because I think the unique proposition that you have is that you've been coming here for, a really, really long time. There's only a few people that are here that actually know the business and the waves and the cycles like you do. Is what's going on right now the same as what happened in the 80s when we had the big spike? Is gold signaling the same thing? Is it different? What do you think? If anything, has changed in what you've learned while you're here? And what do you get the feeling the consensus is from, maybe some of the big brains? Because you were on the panel.
Right. So gold and silver are hitting record highs. In dollars, in fiat currency. During a period of time when there is no strife in the U.S. economy, there's no fear in the U.S. markets, complacency, which is abnormal because in the previous 3 really strong precious metals markets, we've seen fear in the U.S. driving U.S. investors to buy precious metals hand over fist. But what is happening now that's hard to perceive if you're in the U.S., outside of the U.S., we're seeing precious metals being bought hand over fist in China and India and around the world because there's a growing unease with the health of the U.S. Because of our debt and our deficits, and now some of the disruptions that President Trump is creating through his tariffs, which is disrupting the global trade order. So investors around the world who are seeing, how shall I say it, they're a little bit concerned about how the U.S. is going right now. And we're in the middle of a government shutdown. We can't even do our own business. And we have this huge amount of debt. We have debt to GDP at 120%. And they're seeking safe haven outside of fiat currencies because there's been a global debt explosion since the great financial crisis. And now the size of the debt is starting to matter. And with the way that we're fracturing some of the trade relationships that we've had, some of the investors and central banks around the world are a little concerned about how the fiat money system may actually go in the future. So they're hedging their bets and buying gold and silver at record rates. And when you see this kind of physical demand, which has been enormous this year, it's been extraordinary, which is what has driven gold and silver so sharply higher. And we can see it clearly in two different tariff episodes, one over China in April when they drove the price up $500 in gold by themselves after President Trump tariffed them 145% while we pulled tariffs back on everyone else. That was the first wave of buying. And then in August 28th, President Trump tariffed India 50% because of India's continuing to buy oil from Russia, supporting Russia in their war against the Ukraine, which he's unhappy about. And I understand what President Trump's trying to do. He's trying to, deal with the problems that we have, which are enormous. And he's the only president that has the wherewithal to actually try and do it. And we do have to bring manufacturing back home to make our country more resilient and less vulnerable to China withholding rare earth minerals or not buying our farm products from our farmers. But when you tariff a country like India 50%, it caused another buying wave of precious metals in India that coincided with festival season, which is Diwali, which ended the second week of October. And this year in particular, a lot of Indians bought silver instead of gold as gifts, which is the traditional gifts, precious metals for Diwali. And they drove the market up dramatically themselves. And we can see it now. Clearly, this is what has happened. It's been a huge physical buying wave, and it's paused for right now. But because it's physical buying and not speculators in New York pushing the price around through leveraged contracts, I think this market has a lot of resilience in it. It won't give up that much when we go into a corrective phase, and it means that there's a little less trust in the dollar, a little less trust in the U.S. right now globally. And investors are turning to precious metals, gold and silver in particular, in droves to do that.
So I have a lot to say about all that.
I know.
And I always do, and that's what we do in the Investor Mentoring Club every month. But I don't really want to go there because I've gotten to a place of understanding, I think, as you know, and I always try to relate it back to Main Street. But I feel like every year I gain a little bit more insight. I get a little bit more into the esoteric of understanding the financial system. And I try to discipline myself to come back and realize, oh, what does all that mean to Main Street? Like, what does that mean to me?
Right.
I'm going to ask Max, who doesn't live in the same world you and I live in. After everything you just heard, Max, like, what questions do you have? What did you not understand? Because maybe we together can work to help you understand. Because you're kind of the avatar, if you will, of the people we create content for. Main Street America. You're out there working your job, raising your kids, trying to figure out. You hear a guy like that talk.
Yeah.
What are you thinking?
Yeah, I'm thinking that a lot of the buying sprees are just fear-driven. It seems like every 5 years or every 2 or 3 years, there's a big wave, and regular folks that aren't, maybe they're doing something else to make a good income. They're entrepreneurs growing up a business. They're buying, and it's kind of at the top of the market. And so I think kind of the content, or what resonated with me the most, is how and when to start developing a plan to just buy a percentage of precious metals irregardless of what the current price is, and not try to be a speculator on it. Would you say that's sort of a possible takeaway, is just get involved, don't wait to time the market perfectly when it comes to this asset class?
Yeah, we train people in the U.S. to try and make as much money as fast as possible. And that's what the CNBC teaches. What happened? What stock went up today? And I've done the Money Show for years, where most of those people that attend the Money Show, they want to know what stocks they can buy.
Rick Rule comes here and goes, you guys all think you're investors? You're really speculators. He teases the audience every year.
Right. So it's not about making a quick buck. It's about preserving and protecting what you have. And if you want to do it and get that insurance policy in place with precious metals, the absolute best way to do it is just to get on an accumulation program, a cost averaging program where you buy on a regular basis, whether that's monthly, quarterly, or annually. But you have to have the discipline to stick with it, because a lot of people start, but then they aren't consistent and don't finish until you get your insurance policy in place. So when you have your 5 or 10% of assets in precious metals, you have your policy. You don't have to go write a check again for health insurance or car insurance or life insurance or home insurance like you do every year. You have your policy in place. And if it pays you a dividend by going up in value and you want to trim it a little bit, then you can redeploy some of those assets, right? But that's really what it's all about. And cost averaging over time is really the best way to do it through what we call stacking. You just keep adding on a regular basis on a dollar amount or an ounce amount, depending on how you want to do it.
What about in more like tax advantageous type account? What do you know? Kind of what the rules are there? Like if a self-directed IRA type thing?
Yeah, you can put precious metals into your IRA, but they have to be held by a custodian independently. So what you have to do is have an account with a IRA company, fund it, then buy precious metals with your recommended dealer or your authorized dealer. And then the IRA company would pay my company, and we would ship it to the warehouse where the IRA company has a depository where they store it for you. So you cannot hold it yourself, but you can put physical precious metals into an IRA, and that way if you get gains, they're tax-free.
Sure. So do you have a preference or recommendation on which people do? Because it seems like some people are investing in gold for the purpose of what you said, the dollar, it gets weaker, the gold gets stronger, for just like sensible financial planning as a percentage. But then some are doing it out of fear of the apocalypse. Okay. So can you kind of separate those two? Which ones are at the conference, if not both, and how physical gold plays into that versus holding somewhere else?
Well, I've been in this business.
You get what I mean?
Yeah, I've been in this business a long, long time, and the profile of our client base is quite wide and diverse. We have high-end executives and C-suite people who just want to have some of their money outside of the dollar. We have mainstream investors who are independent, usually small business owners, who work hard for their money and they want to preserve and protect their wealth. That's why it's an insurance policy. And then we have people that don't trust our government or don't trust our currency, right. and they are a little bit more reactionary.
Yeah.
They're a lot more private, and they really want to not be in the dollar. They want to be in the dollar as little as possible. So sometimes some of those clients go a lot farther than 10% in their holdings of precious metals. And it's all okay with us. We're just trying to help people. We'll tell them what we think is sound for them or help them rebalance depending on what they hold. But it's not our decision to make. That's a personal decision that most investors need to make themselves. We can just tell you what we think works based on what is reasonable and rational.
You've like Russ said, you've been coming to the conference a long time. You've seen a lot of things change. Mm-hmm. If you made a list, next 10 years, what's not going to change, maybe more predictable over time, what do you think would be on that list?
Well, I think the easiest thing to predict that won't change is the growth of our debt. The U.S. is just going to keep growing our debt. Even if President Trump is extremely successful, he'll slow it down, the rate of growth. I don't think we can actually reduce it, but he'll arrest the continuing pace of the depreciation of the dollar, which would be good, actually. I do think if we bring manufacturing back home and can we rebuild some resilience, that would be great for the U.S. economy. That would be a major change because we've spent 20 years shedding manufacturing to the lowest, cheapest producer of the raw goods and finished goods. And now we're paying the price for that. And we need to have more resilience and not be a service economy or a consumer economy. We need to make things to have real businesses. We're great at technology. AI is going to change things a bit. But it's really the nuts and bolts of life that we need to reconstitute in the U.S. to make our country less vulnerable to shocks that now we are potentially vulnerable to from the outside because we don't have great food supply or a great manufacturing capacity. Right?
As you keep progressing in your business, entrepreneur career, what are some things on your wish list this next year that you're trying to get more of, and maybe a list of less of?
Oh, that's a that's a good question. I would like to see more people learn how to participate in precious metals well. My business is not, it's an unregulated business. Anyone can be a precious metals dealer tomorrow, and we have opportunists come in. So I would like to see more people participate in our marketplace because it's good for them. You know, Rick Rule says maybe 0.5% of the U.S. citizens actually own gold or silver. The norm's 2%. I'd like to see us get closer to 2%. I'd actually like to see us go higher than that. I'd like to see less debt. I'd like to see less strife between Americans. You know, we're fighting more and more with each other, and that's typically a bad sign for an aging empire, and we are an aging empire at this point in time. Personally, I just want my kids to be happy, well-fed, my wife to be happy, and for my family to grow more resilience as well, and to continue to teach them what, you know, a good life is about, what sound money is about, and how to be independent when they come of age.
When do you let your kids know that you're doing well financially? You know, it seems like it's the weirdest thing. You know, it's like a talking about how much you make is like a secret, and I do a lot more than my family, and I can't really even talk to them about it. And you know, with my kids, I'm trying to help. I'll give you an example. We were talking about the hollowing out of the middle class at the dinner table. And my daughter Ann, who's 16, she's not young, and she said, "Are we middle class?" And my wife is like, "No, honey, we're not middle class." And she goes, "Are we lower class?" And I'm like, "Baby, we make very good income." And so, so there's a disconnect, and they don't know what's going on when they're younger, and they don't understand it. When do you plan on kind of letting your kids know, if ever, how you're doing, and because doesn't it kind of affect their motivation going forward in life? Do you know what I mean?
Yeah, my oldest isn't ready yet to really get that hard lesson. He's still learning just how to earn things.
13, right?
Yeah, that he can so that he can gain for himself. So when he really wants something that is beyond his means, that's when we have that conversation. If you want that, it takes a lot of hard work to get there. Now I can help you, but this is what it's going to take for me to help you so you can pay me back one way or another. It could be through money, it could be through services, right? But I want them to have value attached to their work and attached to the reward. I think that's the most important thing. So it's not just handed to them and they just don't take it for granted, because I think we have done that with a lot of, with a generation now. We have an entitled generation who thinks that they should have what we have when we've spent a lifetime gaining it, and they just expect that it should be there. So again, it comes down to what's the value of your time and effort worth, and how do you increase that value, and how, more importantly, and I haven't touched on this, is how can you do that by being of service to others?
And what would that look like specifically? Like, what would you have your 13, let's say next, 4 or 5 years, in the next 4 or 5 years, what would you have your 13-year-old, is it a son?
Yes. Well, one of the things my wife does is every week she drives Meals on Wheels around the community to give the older people, a meal out from the kitchen that produces them. So we've already got my son riding with her as when he can do it outside of school. So he can, right now he's just participating, and he knows we're helping people, but he doesn't really understand why they need it, right? But he's almost there. Mm-hmm. So when we get to that point where we can really explain to him and he can get it, then we'll do that. It's like you can try and teach a kid and tell them something, and they just won't get it. But just the moment they come to you and go, why, you drop everything and you tell them why, because then they're ready to hear it, right? That's really the lesson that I've learned. You got to know when they're ready. And when they are ready, you've got to devote everything to it, because then they'll take it in and they'll get it. And every kid's different. In some ways, my 7-year-old gets some of this a little bit better than my 13-year-old does at this point in time, and vice versa, right?
Do you have a strategy that you and your wife are thinking about of how much college to support, and based on that percentage, how that feeds into the equation of, like you said, the kids appreciating it versus just kind of going hog wild? Do you ever think about that?
I want to see, my son's only in 6th grade at this point in time.
Sure.
So let's get him into into high school first, and then sophomore year, and then we'll see how he's developing at that point in time. So we've got some time to still think about that. You may not.
No, my oldest is 19. We're going through this right now.
Yeah. So what are you doing?
Well, right now we're making her pay for some of it because that's what we've been doing along the road, and that seems to have been a lot better path. The percentages change, but it just seems like if they don't have any skin in the game, it's just not the same response and not the same effort. Russell, you've had kids go through this process. What do you think?
Well, not really. Not a fan of college. I didn't go to college. None of my kids went to college until my youngest, and he went to college because he was a good football player. We thought he had a chance to play at a high level. And so...
well, what about other ways you financially participated? You've done well. I'm sure your kids have figured out that you've done well, even if you didn't show them the tax returns. Where did you, as you were parenting, kind of draw the line between what you could provide for them and it not being, so much that you felt like it was kind of spoiling them? Do you know what I mean?
Yeah, I would say I did not do a great job. I needed to be listening to a show like you and thinking about the things that you think about and ask about. I brought my kids into business. They were homeschooled, and so my two older daughters came out of the house with me and came to work with me, and we built million-dollar companies together. My middle daughter built an event company and a financial education company with me, and really was in charge of organizing it operationally, and she had big responsibilities before she was 18 years old. Her older sister helped me grow my mortgage company, and she had big responsibilities before she was 20 years old. And so they understood hard work, they understood personal responsibility, they understood business responsibility, and they learned how to sell, they learned how to present, they learned how to do financial strategy, they learned how to manage people, learned how to deal.
All the things they don't teach in school.
All the things they needed to learn, and then we all went through the financial crisis together. It's no secret that in that crisis I lost everything. And the kids that were behind them didn't come up with plenty. They came up with, we were living in a house that was being foreclosed on. They saw the cars being repossessed. They saw debt collectors coming to the door. So they almost had that depression-like experience. And at the tail end of that, I'm trying to keep my son in college, and I did not want him to come out with the millstone of student debt around his neck. And despite losing everything, what little that I had all went into keeping him out of student debt. Meanwhile, we're working to rebuild our business and rebuild our company. So I really didn't have to deal with much of being a parent from a position of affluence. Rebuilding the business and doing the things I'm doing today, my kids are already out, they're on their own. I really don't have to worry about that. So I don't know that I fit in. That's why I'm excited about having your show on the network. I think that the struggles that you have, I hope that people have this problem. I want people to have the problem.
Yeah, it's good and bad.
Yeah, it's still a problem, but I want them to have that problem. But I think, if we have another crisis, if this reset of the financial system or the currency doesn't survive and we have something, I think I'll have a lot to say to people who are trying to navigate that because I went through it. But I think that you can't ever count on the way it is. I think everything can change, and it can change sometimes very quickly. I think it's less important to talk about what we're doing in terms of managing wealth. I think it's a lot more important to talk about how we're managing our purpose, our daily choices and activities, and how we are going about the business of creating value for the world, understanding that in the exchange of value through capitalism, Main Street capitalism, when you create value and offer value, then you receive the value that somebody else created. And if you stay focused on that, you become more like a Steve Jobs. You become more like somebody, and I'm not in a Steve Jobs category, but where you're so motivated by the change you're working to be in the world and the difference you're wanting to make, that it really doesn't matter how much money you have or you don't have. It just becomes a tool. It doesn't become a goal. It doesn't become the focal point. It just becomes one more thing, like taking care of your body or taking care of your car or taking care of the house. You take care of your wealth. But what you get up every day and stay focused on is developing as a human being. And I would, in my case, I would say seeking and finding your purpose. I'm of the belief that all of this is a creation. Somebody created it. I'm part of it. They probably put me here for a purpose. I probably wasn't just to sit around and watch TV and eat bonbons. So
poor bonbons, man. They take such a
they
hit,
do,
don't
they
they?
do.
I've met about 1 billion people. Nobody's ever actually
even
eaten one of them.
bonbon. But I think my point, not to belabor it, is just that to me, training a child up is not about learning how to accumulate wealth or manage wealth from the standpoint of it being the end game of anything. It's just one more thing in the stewardship responsibility that you have that is subordinate to the main thing. And the main thing is, what is your purpose? How are you creating value? And then how are you responding for yourself, for the people who are counting on you as a leader? Even your friends are looking to you for leadership. Your neighbors are looking to you for leadership. Obviously, when you become a spouse, your spouse is looking to you for leadership. When you become a parent, as you well know, your parents are looking to you for leadership. And if you take the step to become a business owner where you're really creating a team, your team is looking to you for leadership. So I think, to me, it's about finding your purpose, organizing your daily activities to create value and to operate as a leader. And if you do that, everything else you have will actually take care of itself. I don't spend a lot of time thinking about portfolio, thinking about wealth, or even thinking about passing on wealth. I think a lot about teaching people, sharing people out of my experiences. And I spend most of my time, if you listen to me, I spend most of my time talking about the things that I've gone through that were negative, because that's where all the lessons are, as far as I'm concerned. And what I hope to show people is that if you get the lesson and pick yourself back up and keep going, then you can continue to be effectively used to fulfill your purpose and create value. And I don't even keep score by wealth. I hang around a lot of very wealthy guys, as you know. I can tell you what we don't do is get out and compare balance sheets and try to figure out who's got the bigger yacht, who's got the faster car, who's got the bigger property, who's got the bigger island, who's got the faster jet, who's got more commas in their balance sheet. Nobody cares about that. What we care about is, what are we doing every day that matters? And then the business becomes about managing the cash flow that is required, because I view cash flow like blood. It's got to circulate in the organization or the organism or the mission to fuel all the vital functions. And if you do that properly, then you're going to end up with some excess. And to me, it's like, okay, then I'm going to invest it in other productive assets, and I'm going to save it in real money, which to me is precious metals. And that's kind of how I approach all that. And I want my kids, to the extent that they pay any attention to me these days, to look at that and go, okay, that's what I want to do.
Yeah, right now I'm just trying to impart to my children personal responsibility for their actions and their deeds and service to others, to see how that rewards them in ways that you wouldn't expect. And when they reveal to us or themselves where their real strengths and weaknesses are as adults, then we'll help to nurture that when the time is right. That's really, I think, the thing to do is, but if you give them a sound foundation before that, that's what we're trying to build for our kids now.
Makes sense.
Awesome. Hey, guys, great conversation. I know we could go on and on. It was great to have you, Max. We're excited to see your show.
Excited.
And Dana, we're hoping to get your show, because tell everybody a little bit about your show. You've got a YouTube channel. Talk a little bit about that.
Right. So my YouTube channel, American Gold Exchange, this is a constant, it's my ongoing stream of consciousness videos about once every 2 or 3 weeks on what's happening in the precious metals markets and why. So it's my running commentary on what's driving metals higher or lower, the basic underlying economic fundamentals, The changes in the trends, like this year has been a big change in physical buying globally, which has driven the price to record highs. And it's a game changer. And that's what I've tried to impart at this conference on the precious metals panel, that this is something different that's really happening.
Nice.
So that's what it's all about, just to try and keep people who are interested informed with timely, factual, and potentially actionable information if that's what they choose to do.
And you also have a free report, a report that is just explaining for people who are just kind of getting started about investing in metals. Tell everybody about that report.
Right, we've got a little getting started guide, which features the most widely traded, competitively priced, and easily sellable bullion products and vintage coin products that are available to buy or sell, that'll help people stay on the mainstream, that are the best products for them to own and why. Our business is consultative in nature. We just try and help people. I've learned a long time ago that if you treat your customers, my customers are really my best asset. It's not my inventory, it's not the money I've earned. If you treat people well, that's really where the wealth of the business is. And that's all I've tried to do. And I understood that from day one.
Well,
Right.
Education precedes transaction, and
Correct.
I believe that anybody who is going to make an investment or any type ought to invest first in education. Ben Franklin said, investment in education pays the best dividends. And so
Right.
he's a pretty smart guy. I think that's why they put him on the $100 bill. But okay, so here's what we're going to do. If you send an email to AGE, because American Gold Exchange, we're going to use AGE at mainstreetcapitalist.com, then we will send you Dana's report. We will send you information about how you can follow him, information about his show. And if we're successful, we'll get him onto the Main Street Media Network. If you're interested in that, just check out mainstreetmedianetwork.com. But if you send an email to AGE at mainstreetcapitalist.com, then we'll tell you about the Main Street Media Network too. And then you can check out Max's show too. It's going to be great, especially if you're out there and you've got children and you're trying to figure out how do we raise these children to be happy, productive human beings, not looking for handouts, finding their purpose, and then how do you go about the business of blessing them and letting them realize some of the fruits of your labor and the things that you worked hard to give your family without ruining them, making them think they're entitled to all those things. And that's not an easy thing to crack. So we'll see you next time. Thank you so much for watching the show. Guys, thank you for joining me. I really appreciate it.